And this is Craige Campbell from Good Money Skills, and as always, like and subscribe for more information and to get the content that I'm sending out each and every week, sometimes more than once a week, but you know what I'm saying. Anyway, today's topic, we're going to be talking about investing. And it's a huge topic, especially in our current climate right now. The stock market is going up, it's going down, it's going sideways, it's going all over the place. Every day we turn onto the news and we're hearing about tariffs and more tariffs and then no tariffs, but it's just wreaking havoc on the market, on how we spend and just our sleep sometimes and our mindset. Like, what are we supposed to be doing? So we're going to get into that, and also I'm going to provide an alternative in terms of investing in the stock market for those that are interested. So keep listening and you'll find out more details. All right, so let's get into it. So let's face it, the stock market is getting worse in terms of volatility. Up 10%, down 10%, sideways, all of this is happening the same day. And it's making people really panic and really question their investing tactics. So those that maybe haven't invested before or have shunned the stock market altogether are thinking, see, this is why I've done this. I'm staying out of the stock market. Others that are currently in the stock market are thinking, well, I'm going to pull my money out because it's gone down so far. Another tactic. Others are just going to ride it out and are doing nothing, just leaving everything as is, but not putting any money in, while others still are seeing this as a buying opportunity with stocks that I guess they felt were really good stocks when they purchased them. They're still good stocks and good companies today. Now they're just getting them at a discount. So they're pouring new money into the stock market, hoping that when the stock market goes up again, they'll be in a much better place. So what bucket do you lie in? 1, not investing, not interested in the stock market. 2, in the stock market but pulling your money out. 3, in the stock market, not doing a thing, just letting it ride, just closing your eyes and hoping everything's going to be fine. Or 4, dipping into the stock market by putting more money in and dollar cost averaging up. What are you doing? Now, when it comes to building wealth, there's few tools that are more powerful than compound interest. And by putting your money into work early, making steady contributions regardless of the ups and downs in the direction of the stock market, and by choosing reliable, sound investments, you can turn even the modest savings into a substantial future. Depending on your age and risk tolerance, you should be investing your money in growth. And that would be blue chip companies like banks, for example, consumables, technology, big, good companies, solid companies that really help grow the economy. Then, of course, if you have a balanced portfolio, that'd be a mix of blue chip stocks and bonds, maybe a little bit of cash. So you also have some investment income. Then there's the income portfolio. So you have less focus on growth and more on income stability because you need that monthly payout of cash. So all that is fine and well, but the question I get asked more than anything else is, where can I invest my money and get solid returns outside of the stock market? It's a good question when you really think about it, especially for those that are looking for maybe more stability as they get older. They simply want to avoid the roller coaster of the stock market and the volatility that's there. Now, don't get me wrong, investing in the stock market can be a great place to grow your money. I invest my money in the stock market, at least some of it. And that's where most people invest their money. And you can make even more money if you really understand options in the stock market. But again, the stock market isn't for everyone. Now, on the other hand, if you want guaranteed investments, of course, they're safe. They bring you returns of only between 2 and 5% a year, and that's not exactly exciting. No one could say that's really exciting amounts. But what if you can get the best of both worlds? Double-digit growth, guaranteed returns, and none of the market fluctuations and stress. Well, that would be in the private sector, not the public sector. If I've piqued your curiosity and your interest just a little bit, I've got 3 exclusive opportunities that I want to share with you. These are high yield investments and they're backed by real estate, offering strong returns and strategic growth. and portfolio diversification. But before I get into it, I want to speak about this one thing. This is not real estate the way you normally know it. Most people, of course, they get into real estate by buying a home, like a single family home or multifamily home. So let's say you have a couple of people. Let's say you have two people in a home. Let's say you have two families in a home, one on the upper level, one on the lower level. So you're making good income. The income combined that you're getting from rent is more than enough to pay for utilities and property taxes and, of course, your mortgage. Sounds like a plan. But if one person decides that they're going to skip out and maybe not pay rent, or if they move out and you can't fill that vacancy right away, you are on the hook for that mortgage. We've all been there. We've heard of this before, okay? Now, on the other side, you can look at multifamily properties of 5, 10, 20, 30, big, large buildings. That makes a whole lot of sense because now, if you got 1, 2, 4, 5 people that decide, okay, I can't pay rent this month, you're still okay because the majority of your tenants are actually paying their rent every single month. You can make a real good income that way. So that's why a lot of people are looking at multifamily properties. It makes sense. The main issue with this, though, is the cost to get in. If you're looking to buy a multifamily property and you want to do this on your own, so you don't want to get outside investors and other people's money and all the other things, well, you got to come up with maybe $2-3 million, right, to really get a solid place. And of course, you're looking at a 20% down payment in many cases to get those places. A lot of people just don't have that kind of money. They just don't. So how can you get the best of both worlds in terms of getting that cash flow from real estate, the growth and appreciation of real estate, without the challenges of having to come up with that much money as a down payment, or about the pitfalls of getting a single family home and then having to stress if one person misses their rent in any given month? Well, this is how we're going to get into the 3 opportunities I have to talk to you about today. So here's a quick rundown. Option 1, a development offering. This is targeted returns of 16 to 20% annually. You'll participate in profits of a large condo development project. Your investment is locked in and pays out at the end of the term. The projected total returns is 103.3%. That's approximately 16 to 20% annualized. The completion of this project is Q1 of 2029, and it's a 12-story, 355-unit mid-rise condo. And it's eligible through RSPs, TFSAs, LIRAs, and of course, locked-in retirement funds. Option 2 is an income development fund. This has targeted returns of 12 to 16%. This is a diversified fund that includes land development, real estate lending, and commercial properties all rolled into one. So this offers a mix of appreciation and monthly cash flow. So you can get monthly income every single month. Return averages of 12 to 16% over a 10-year period. So there's potential, like I said, for passive income through monthly distributions. So you can make additional passive income on your money. Not bad. And now there's option 3. Option 3 is residential apartment fund. This is targeted returns of 8 to 12%. This is a more stable investment focused on rental purpose apartment buildings. So this particular investment offers consistent annual returns compounded monthly. It also provides monthly passive income. So for each of these investments, there is a minimum amount, but keep in mind that minimum amount can come from multiple sources. So if you have money in a savings account and money in a joint account and money in an investment account, you can combine that amount and put into any of these funds. So as long as you make that combination from any source, you can meet those minimum requirements to be involved in this type of investment. So why would these funds be worth considering? Well, first of all, they have a targeted annual return of a minimum of 8 to 20%, true diversification beyond the stock market, and of course, they're backed by real, tangible real estate assets. If any of the 3 options I've laid out to you sounds like something you'd be interested to maybe explore a little bit, let's connect. I can help you determine which one would be best and which aligns with your financial goals. Just book a call with me in the link below or send me an email, and I'd be happy to get back to you and show you exactly what you need to do to get involved. So that's it for today's video, and next week or the next video, I'm going to be talking about investing in terms of investing in the stock market. Some tips, some tricks, and things that I would be doing right now as we look through the volatility of the stock market in April of 2025. What does that look like? What does that mean to you? What can you do to solidify your wealth and your income? So stay tuned for the next one. Until then, take care and God bless.